Welcome to the Virtual Roadshow series presented by Channelchek and Noble Capital Markets. Of the 6,000 small and micro-cap companies listed on Channelchek, today we're featuring Palladium 1 Mining, TSXV ticker symbol PDM, OTC ticker symbol NKORF. Research coverage of Palladium 1 is provided by Noble Capital Markets. Noble is a FINRA-licensed SEC-registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, Noble's senior research analyst covering Palladium 1, will ask our presenter a selection of the questions received during the broadcast. And now, here is Derrick Weyrauch, President and CEO of Palladium 1 Mining, to make the presentation. Derrick, take it away.
Thank you very much for the intro. My name is Derrick Weyrauch, President and CEO of Palladium 1 Mining. Palladium 1 is an exploration and development company focusing on polymetallic nickel copper deposits in tier 1 mining jurisdictions. I'd encourage you to take a look at our forward-looking statements as part of this presentation. The deck can also be found on our website at palladium1inc.com. By way of background, I'm a chartered accountant, a Canadian chartered accountant by background, equivalent to a US CPA. I've co-founded a number of different mining companies and am currently a non-executive director of Cabral Gold, in addition to running PDM. Supporting me, however, is a very experienced technical team led by Neil Pettigrew, who's a geologist, has been focused in this area in palladium specifics for the last 20 years. He's based in Thunder Bay, Ontario, and is a founding partner of Flagship Exploration. Importantly, on our board is Peter Lightfoot. He's a globally recognized expert on magmatic precious metal, nickel cobalt ore deposits. Having retired from Inco Valley a few years ago, he is now a consultant to the global metals industry. Of note, he was responsible for Voisey's Bay and wrote the authoritative textbook on the Sudbury Igneous Complex. Also on our board is Lawrence Ralston, another 40-year veteran of the mining industry, and also a geologist. Our most recent addition to our team is an advisor by the name of Gord Mars, who is a globally recognized expert on processing magmatic sulfide ore deposits, and has specific expertise with regards to his palladium experience, having previously run the North American Palladium lactazile processing plant in Ontario, Canada, as well as being the former mill manager at Falconbridge in Sudbury. The company itself has a market capitalization of approximately $40 million. We're extremely well capitalized right now with about $7.7 million cash on hand. And in addition to that, we have about $1.8 million of in-the-money warrants. We have had, over the last couple of months, a tremendous amount of activity on our stock. We've had over 100% of our float change hands as we were announcing the various results with regards to the discoveries that I'll get into shortly. And part of the churn was also related to an overhang we had with warrants that has now been cleared as of December the 2nd. Our largest shareholder is Eric Sprott, who has just over 20% interest in the company and just exercised about 15 million shares last week, actually. The company itself, our vision is to have 100% owned district scale projects in best-in-class jurisdictions. We're creating value through the drill bit. We currently have 2 exploration drilling programs underway, one in Finland and one in Canada, and we will be adding a drilling program to our 3rd project in Ontario in February of this year. Our focus, as I said earlier, is palladium, platinum, gold, or PGE, if you will, copper nickel projects, tier 1 jurisdictions, and we are exclusively focused right now in Finland and in Canada. Finland is actually ranked the number 1 mining jurisdiction globally from a mining policy effectiveness perspective. Our flagship project is the Latina Calissima, or LK project. It is palladium dominant, and it's located in north central Finland. We specifically like working in the PGE space because of the very unique fundamentals related to the supply and demand. Palladium is a very hot commodity. It's actually the most valuable of the four major precious metals, having a price that's roughly $400 to $500 per ounce more valuable than gold. In addition, Palladium has been in an 8-year supply deficit. 2020 is expected to be the 9th year of supply deficit. And a large contributing factor to that has been inelastic demand and increasing demand as a result of tighter and tighter environmental regulations, most notably in the automotive sector. The automotive sector alone accounts for about 140% of global mine supply. Challenge that exists in the market is that existing producers are quite constrained from adding supply to the market to meet the demand, largely because 90% of mine supply is as a byproduct of other mining activities, whether that be nickel or platinum. So structurally, there's a real problem in the market. And in addition to that, 80% of the global supply comes from what I'll term higher risk jurisdictions, namely South Africa and Russia, that both have some structural challenges with regards to lack of investment, stability of the environment from a labor perspective. What underpins our valuation is an existing 43-101 technical report that is pit constrained. In other words, there was an economic evaluation done of the overall resource endowment and need to fit into and have positive economics within a pit constrained environment. But the real story here is about a very credible path to resource growth. Our near-term target is to have approximately 100 million tons of resources, and we're obviously funded to do that. And I'll walk you through that now. I'll do that by showing you a brief video to help communicate exactly what we're looking at in Finland. So Finland, as I said, is a tier 1 jurisdiction. There's a tremendous amount of smelting and refining capability locally. Where we happen to be located, we have excellent existing infrastructure with being on a paved highway network, high voltage power lines, ample amount of water. And these are all things that are going to bode very well for reduced costs when we look at a development scenario, as well as it's helping us right now keeping our exploration costs down. What's really interesting about and what makes the LK project unique is that we have a 3-to-1 ratio of palladium versus platinum, but importantly, we have a 38-kilometer long favorable basal contact unit that we know is substantially mineralized. Our job is really just to zero into the economic areas to build out ore bodies that can be mined economically. Our focus is at the Kukua deposit at the north end of the property that you see outlined here. You're looking at the global resource model. The subset of that is what we report as our open pit resources because it fit into the conceptual pit envelope. And based on the work we were able to do earlier this year, we know that it is going to grow. Our initial hole number 7 in the southwest corner of the conceptual pit, hit excellent grade over a robust width, and we'll be increasing our confidence level of the resource, but also adding ounces. But what really opened things up was hole number 6 that we announced in August of this year. It's about 1.5 kilometers or a mile away from the existing resource. It hit excellent grade at almost 2 grams palladium equivalent over 63 meters within a broader envelope of about 180 meters, averaging over a gram. And that is very significant because it's very shallow. Basically, we got into the mineralization after about 10 meters of overburden. And what this particular hole did is it proved that a large IP anomaly that we discovered earlier in the year is mineralized. And from a scale perspective, you can see the anomaly here, and you can also see a number of drill traces that were plotted for drilling when this video was put together. We were able to get back into the field post-COVID in August and have drilled all of those holes with 100% success rate. Obviously, with a 4-kilometer strike length, It dwarfs our existing resource, and we are certainly trying to understand how many more multiples of Kukua we might have, and are envisioning multiple open pit scenarios given the shallow mineralization. In addition to that, at our Murtalampi zone, just to the north, about 2 kilometers, we have an opportunity for a satellite pit where we've also had a great degree of exploration success. So if I zoom into the real meat of the matter and looking at that Kukua area from plan view, you can see the existing open pit in the yellow outlines. All the black dots are the drill locations that we were able to do in February and March pre the COVID shutdown, while the red dots are the drill hole locations that were shown in the video there in that Kukua South zone. So that anomaly, if you can see my mouse, runs about 4 kilometers just south of the existing pit. We believe the anomaly is simply an extension of the Kukua zone. There's a fault running through or underneath the Kukua pit. And what we're seeing in the rocks is basically the exact same geochemical signatures, metal ratios, etc. So hole 6 is outlined here in the black dot, is 100 meters away from hole 14, which was our first step out hole when coming back in August. Then we stepped out another 450 meters, 750 meters. We were hitting joy in all the holes, and then we decided to do multi-kilometer step outs and went all the way over to hole 17 and 21. And in each of these locations, we have got sections that have been drilled. So we have announced a 17,500 meter infill drilling program in order to bring this area into the resource category. That program started about 3 weeks ago. It's well underway, and we're initially targeting the area between hole 6 and 16. And I should point out, hole 16 is double the grade we've seen elsewhere. It's our best intercept by a long shot. Very, very shallow. As a matter of fact, it includes a core interval of approximately 19 meters at 4.6 grams per ton, with 3.55 being PGEs alone. Very near surface and really approaching underground mining grades. So we're very pleased with that. And we will be providing more news in the upcoming weeks. We expect to get first assay results back shortly after Christmas, perhaps right around New Year. But the story doesn't really end there as far as Kukua is concerned. This is the eastern extent, or rather the right-hand side of the image is the eastern extent of the survey. We know that the strike extent goes another approximately 2 to 2.5 kilometers beyond that. So, what the question we're trying to answer now is how many more Kukuas do we have in this area? And again, I'll remind you that the Kukua has in indicated category about 635,000 ounces palladium equivalent and 535,000 ounces palladium equivalent inferred. And the extension that I referred to, if we zoom out a little bit on the image here, and we're looking at Kukua now inside this yellow envelope, which is our exploration permits, whereas inside the mustard color is our reserved lands where we have a priority right. The anomaly that we were just looking at Kukua South is outlined in the blue hash marks, which represents the geophysics that we did earlier this year. And you can see the rock units in the background, the green, extend another 2 kilometers. So that mapping work is there, and we're really looking forward to turning that into an exploration permit and supplementing with some additional geophysics and starting to drill that area as well. Now, this is only one part of the property package. The entire LK project here, as you can see on the image, there's a number of different segments to the property, but in aggregate, we have 38 kilometers of this favorable basal contact, and we're focusing in on one subset of it. One of the things we did when we embarked on 2020 was wanting to have a sufficient number of drill targets, so we aggressively conducted a large geophysical program that included induced polarization as well as high resolution drone magnetics. We covered 12 kilometers of the 38 kilometer contact. Those were all represented in the various blue hash marks here, the 5 major survey grids. They've all lit up exceptionally well. Our initial intent was to follow that up with drilling out or adding drilling to the Hakiaho trend at the bottom of the image where the red dot is and where we have a historical resource estimate. We, because of COVID, had to suspend our activities, and quite frankly, that suspension gave us some time to pivot our thinking, and we, rather than just focusing in on some infill drilling at Hakiaho and adding some ounces there, we decided, because we're seeing elevated PGE values up at Kukua, that we would target that area and be able to add value to the shareholders quickest. At Kukua, the budget is $5.3 million for that 17,500 meter drilling program. And we're hopeful that, and our objective is to add ounces at less than $2 Canadian per ounce in an environment where palladium is trading at approximately $2,400 per ounce. This sheet now is just a summary of the existing resource at Kukua and some of the inputs for the economic analysis that we did. And as you can see in the cross section here, the mineralization is coming to surface. The conceptual pit only goes down about 275 meters. With hole 7 that you saw in the video, we know that pit will go deeper. We just gave the data and to do some remodeling to make that extension. But importantly, the waste to ore ratio is quite low. It's only 3 to 1 and very suggestive of a low cost mining scenario, which we hope to and plan to continue as we progress with the definition of resources in the Kukua South area. At the bottom of the table here is a breakdown of the various metals that we have in our resource. And as you can see in the indicated category, we've got 0.81 grams per ton palladium relative to platinum of almost 2.3. Total PGEs are approximately 1.2 grams per ton. But on an equivalency basis, we have 1.8 grams per ton, and that's because we get a nice copper credit of 0.15 grams per ton, or 0.15%. So LK, it's unique in that it's outside of South Africa. It's palladium dominant, large package that we know is largely mineralized. And it's an intrusive style of mineralization. It's disseminated sulfides that we're really chasing, and has a lot of similarities to the Platte Reef type deposits that are located in the Bushveld complex of South Africa. Adjoining LK, however, is our KS project that we acquired earlier this year via staking. It's a completely different target, even though it adjoins LK. It's what we're looking for here is high grade massive sulfides. There is a regional scale magnetic and gravity anomaly located on this project, and it's believed to be the conduit or the feeder system that emplaced the mineralization at LK, and has similarities to the Norilsker Voisey's Bay style. If we zoom out, looking at cross section of Finland here, you can see the LK project at the top of the image, and where KS is outlined in red, and the large connecting dike that starts off over on the Russian border, porpoises down quite deep, and is believed to get rather shallow on the piece that we acquired. And that's actually why we acquired it, because it is fairly shallow relative to the middle of the country. In the middle of the country, it's believed to be about 2,500 to 3,000 meters deep, so a bit excessive from a mining scenario. But one of the interesting things that has happened over the course of this year is the Finnish Geological Survey has announced that they were going to drill the first hole to actually test this dike, and you can see it on the top image here in the gravity and the magnetics in the bottom. It's you can see it on a country scale. But they are drilling a 3,000 meter hole just to the east of our property, and they're already at approximately 1,600 meters of depth. And to the extent that they find that the system is pregnant with sulfides, it is a complete game changer for KS, because it validates the thesis that we've had. And then part of that thesis is that, we know that we have a very high metal tenor in the sulfides at LK. To the extent we find a even a 20–30% massive sulfide unit at KS, it could have exceptionally high value rock. So we're really looking forward to that. And it's very much the big game hunting exercise, whereas LK right now is much more of a farming exercise. Clear path on the direction to go. Just do the work, drill it out, and we'll be adding ounces. This is a sample of just some of the academic work that's been done on the KS project, and it's a massive sulfide traps that we will be looking for, and the analog that we're looking at is Voisey's Bay and the eastern Deeps Conolith that you have here. So as far as Finland is concerned, I think being palladium dominant and what's driving most of the economics is a great position because of the fundamentals in the space. There are very few investment alternatives for investors looking for exposure in one of the hot commodities that's out there. And we've got very realistic growth expectations. But because of our discovery success that we announced within the last week, I just want to touch on two of our projects in Ontario quickly, the Tycho and the Disraeli project. Tycho is a nickel project. It was actually the founding project of the company. So a very large land package just northeast of Barrick's Hemlo mine, or the Generation Mining's Marathon project. And it's an earlier stage project. It's had a couple drill campaigns on it that have returned some very good nickel values. But on the very far eastern side of the property, what we announced last week was the discovery of massive sulfides at a very shallow depth, less than 30 meters from surface. We encountered in our first two drill holes in this area 4-meter segment of massive sulfide, as well as a 2-meter segment. We earlier had discovered an EM conductor, and as a matter of fact, 2 EM conductors. We confirmed them with the ground loop in November, and have drilled that target. So this is very exciting because of the potentially very high value that we have in this rock. Elsewhere on the property, we were intercepting drill core with 1% nickel, and a little bit higher than the copper values, and we're anticipating fairly robust copper values here. So we're eagerly awaiting the assay results, and we should be getting those as well shortly after Christmas, perhaps around New Year, and we'll be getting them out into the market soon thereafter. The third project that I mentioned earlier, the Disraeli project, is also in Ontario. It's a couple hours north of Thunder Bay, Ontario, in the mid-continental rift on the north side of Lake Superior. Here we have an interesting situation. So it's an earlier stage property, again, has zero drilling on it, and it appears to be on one of the major lineaments in the areas. And what we announced was a reversely polarized intrusive body, as you can see in the image here, that's sitting underneath a lake, as are most of the high value deposits in the area. But all of the higher value deposits, they have reversely polarized portions, or are completely reversely polarized. So that's absolutely key. But not only that, we also have EM responses, as you can see with the orange dots on this slide. So we're very much looking forward to drilling this project in February and getting that news out. So in summary, we have a lot of things going on, tremendous amount of catalysts, and as you can see by the trading activity in our stock over the last, even more so over the last week or so, as this latest 2 announcements have come out, there's a tremendous amount of interest, and we're enjoying the thanks for the work we've been doing. So with that, I'll turn it back over to the moderator.
Thank you, Derrick. I'm Mark Reichman, the Noble Senior Analyst who covers Palladium 1 mining. I will be reading the questions submitted for Derrick's response. So the first question is, considering the run-up in the stock price, especially today, can you state your view of the company's current valuation?
Well, I think, you know, I can't really do an evaluation and talk about it publicly, but I think that with the overhang we've had on the stock due to the warrants over the last year, it's been a real problematic, and I don't think we were appropriately valued then. I think this action that you're seeing today is a reflection of that overhang being lifted and a more appropriate valuation coming into the story. But it's also now we're getting the recognition that you know, we found massive sulfides. It's at surface. It's very close to infrastructure and processing capabilities. So the market is respecting the opportunity here. And in addition to that, we have a third project we'll be drilling soon. So you know, I think I'll let the market decide what is appropriate. But I'm not at all surprised at these levels, and I wouldn't be surprised if the shares continue to accelerate in the coming weeks.
The second question is, what is your longer-term plan for your Tycho nickel project?
Yeah, you know, we weren't spending a lot of money on Tycho. What we've now got is quite a game changer. So we haven't formalized an absolute plan for it. Certainly, we're not getting value in the market from it. It's I don't believe it's been fully recognized, and we also need to get the assays back from the sulfides that we've just announced. And I think in January we'll have a better perspective on how we're going to unlock the maximum amount of value for shareholders.
The next question is, how does the company's valuation track the price of palladium?
Palladium has been, you know, extremely volatile of late. The last couple of years, it's certainly been on an upward trend, but there is a lot of volatility. You'll see it moving around $100 or $200. I don't believe that our share price is directly correlated to palladium. We're not a producer at this stage. If we were a producer and our revenues were, you know, subjected to that volatility, it'd be a different matter. Right now, we're very much in the discovery mode and the resource expansion mode, so there's less direct correlation. But obviously, it is constructive when you have you know, significant exposure to the most precious of the four major precious metals.
The next question is, how will electric vehicles impact demand for platinum group metals, and can automakers switch to lower priced platinum?
Yeah, it's a complex question. You know, I think there's a couple elements here. So one is that although, you know, Tesla's share price has been on an absolute tear for quite a while now, and perhaps ultimately the world will go all electric vehicle, the reality is that we just don't have enough sulfide nickel available for the batteries. We don't have enough copper being produced to satisfy the demand that would just go into the vehicle itself. So I think the adoption is going to be perhaps slower than some of the share prices out there suggest, but the direction is real. What we are seeing though is greater adoption of the hybrid vehicle. And the hybrid electric vehicle, if you will, it still maintains an internal combustion engine. It still requires the catalytic converter and to meet the various emission standards. But because the engine operates a little bit differently in that it turns on and off, it doesn't generate the same heat that is ordinarily generated. And as a result of that, the catalytic converters that are being manufactured actually have more loading of platinum than previously, or the conventional situation. So we actually see this transitional period, which I think is going to be decades in length, being very constructive for palladium. Obviously, there's a lot of commentary and thought about, well, perhaps you know, from a price point perspective, producers or manufacturers are going to want to substitute platinum. Well, platinum, truthfully, it's a smaller market than even palladium, and therefore the price volatility could be that much more significant and disruptive for the automotive manufacturers. But not only that, the properties of platinum are a little bit different than palladium. Palladium performs much better, and platinum tends to sinter at great heat. So I think there will be some substitution. I think it will be good if there is some substitution, but it's not a one-for-one substitution. And you'll probably be putting in more palladium to get the same performance. But not only are these catalytic converters made from these two products, there's also rhodium involved. Rhodium, over $10,000 an ounce. So as you're loading more platinum, you're going to load more rhodium. So the price differential between the two technologies may not be as great as it first appears, and the lifespan may cause problems due to the various regulations, especially the real driving emission standards that are currently in force in places such as Europe and are coming down the pipe in other jurisdictions, for example, India or China.
What exactly is the company's float, and can you discuss OTC versus TSX trading and ownership?
Sure. So the float currently is about 175 million shares on a fully diluted basis. It's just over 200 million shares. Our primary exchange is the TSXV, where the bulk of our trading volume occurs. We do have an OTC listing and have applied for an OTC QB listing. We're in the queue for that, and we'll also be applying for DTC eligibility to make more efficient trading for U.S. investors, because we are seeing a tremendous amount of interest coming from the U.S. and the volumes increasing, and we want to be able to provide a more efficient platform for U.S. investors.
And what percent of your budget currently goes into the LK property, and do you foresee that percent to remain steady, or do you plan on increasing the budget for the Canadian properties?
Yeah, when we shut down operations in March as a result of COVID, we wanted to continue supporting the stock, and the Ontario government announced that exploration activities were an essential service. So we quickly did a financing of about $1.1 million in May, with the expectation that we would be able to start drilling Tycho in June. Unfortunately, the 8-month delay on receiving permit didn't allow us to do that. We got back in the field in Finland first, but part and parcel of that raise and the size of the raise was designed to have a good amount of support for the share price. But now that we have such amazing discovery success at the Smoke Lake Zone with the massive sulfides, we need to reassess and reprioritize. But again, it's a little bit early. We're going to have to wait until we get the assay results and think about things in Q1 of next year. So Tycho has not been elevated. The vast majority of our spend and our flagship has been LK in Finland. And as I indicated, we see a very clear path to adding ounces on a low-cost basis, which ought to give a lot of torque and re-rate to the company as we do that in the near term. So that has been the focus, and as I sit here today, continues to be the focus, but we will be reevaluating things in Q1.
Any thoughts on future royalty financing for the LK property? Is this a possibility?
I am absolutely opposed to selling royalties. I'll be a buyer on them all day long. One of the things that I did, one of the first things I did when getting involved with this company was to seek to repurchase the existing royalties that had been let on the property. Reason being, they're so highly dilutive, but also a very effective tool when you're very close to a development scenario, and you get much more value at that point in time. So back in, I believe it was January of this year, I bought back a royalty from the holder on the whole Hakiaho trend, that 17-kilometer trend. Unfortunately, I was unable to buy the royalty back up on the Kukua zone. EMX Royalties has acquired that from the original prospector. It's a 2% NSR with a buyback rate that we have for half of that royalty. So ultimately, I think the company logically would be buying back that royalty for a fixed price as defined in the contract, and we'd only have a 1% royalty. So, selling royalties is a tool to do as you're project development financing solution, but it's something that is challenging from my perspective.
What is the current monthly burn rate, and has this been impacted by the current COVID dynamics?
Yeah, so our fixed overhead costs are roughly $45,000 Canadian. We have a very low overhead structure. The objective here is to put money into the ground because that's where you're going to create the value. So we don't even have a formal office. We use a shared service facility, for example, in Vancouver, who handles all of our back office accounting, corporate secretarial work. And we've got one person on payroll. Everybody else is as a consultant, and therefore it's very flexible. And we don't have that overhead rate that others might enjoy.
And which commodity, palladium, platinum, nickel, will have the biggest problem in availability, offer versus demand?
Well, we're already seeing the 9-year supply deficit in the palladium market. 2020 is projected to be the 9th year of supply deficit. As I said earlier on the call, about 140% of mine supply goes just into the automotive industry. There is a robust recycling industry that does take place. It supplies about 3.3 million ounces a year. But COVID has certainly hurt it. And what we've seen this year, even with COVID reducing demand because there's been less vehicles sold, the primary consumer of palladium, there's been an offset on the supply side of things. And any projection I look at shows that deficit is projected to continue. And that's in large part why we like being in this space with a palladium dominant project that's in a tier 1 jurisdiction, because we think we're going to get a lot of attention as we continue to de-risk the project.
Well, Derrick, that is all the time we have today. Thank you for helping us get a better understanding of the company's story. If you'd like to access our independent research on Palladium 1 mining, please go to channelchek.com and type the company name or the ticker NKORF in the search box located in the top left company data section of the site. Again, thanks to our guest, Mr. Derrick Weyrauch, President and CEO of Palladium 1 Mining.
This has been the Virtual Roadshow series brought to you by Channelchek and Noble Capital Markets. Log into Channelchek or subscribe to our YouTube channel to get the full catalog of roadshows and C-suite interview channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Thank you for joining us.